Hello and welcome to the Stock Planner channel. Today we'll be discussing American Express and why I think it might go long. My basis is some news articles that were positive. My indicators seem to think it's going to go up, and I performed some rinky-dink analysis, which I'll share with you. It's good enough analysis of why American Express has a positive outlook in the near term, in the near 90 days. So stick with me. But first, I want to remind you that the Stock Planner channel is an education channel. We're sharing our views and ideas with the hopes that you'll take those ideas, do your own due diligence, do your own rinky-dink analysis, apply your simple strategy, and win. So do your own due diligence. So let's get started. The stock we're looking at today is AXP, American Express, credit card. A lot of business people use it. When I was on an expense account, I had a $25,000 limit and ran all my transactions through American Express. Then the 2008 recession occurred, and they lowered my credit limit to $5,000 after the credit card was paid off because they didn't want to assume the risk. I've been mad at them ever since. Anyway, the target price is $178, and that is in this area right there. This is according to FinViz, and FinViz is saying that right now, it's a neutral buy. And so, as a swing trader, I look for reversals. Long run up, some turbulence here, and then a down slide. Is it over? The zigzag, see that? That's a perfect indicator. Always can pick the tops and bottoms, but it does it by looking at future data and repainting itself. So you can't use that as a trading thing unless you wait 2 or 3 bars after the zigzag doesn't know what it's doing, and that is what's occurring right now. Mr. Zigzag doesn't know what it's doing. And what I like to do when Mr. Zigzag don't know what it's doing, and the MACD, that's this, is below the zero line, and it is, and we had a crossover here too. This is the zero lag. My settings are in the description below. The stochastic is below the 20 and come back around, and it has. And the RSI is below the 30 and come back around, and it has. When it all occurred at the same time, that's when I like to take a trade. And that occurred approximately there. And remember, I use these other indicators because Mr. Zigzag repaints itself. These other ones don't. They don't. The line stays the same. But they're lagging indicators, and just kind of tells you when to get in. But anyway, the indicator is saying maybe look for a buy. So my overall goal as a swing trader is to become a more consistent trader. But really, what you're here for is to make some money, and so am I. And what I'm going to show you is that if there's a move expectation of 11% or 12%, and we invest $1,000, with that expected move, we expect to get $120. That's buying or shorting the stock. Or buying a call. In our case, if we're going to think it's going to go up, we're going to buy a call. But buying calls takes a lot of margin. There is an opportunity for around $750 to do a broken wing butterfly, which is a long strategy. And what you're saying is at some point in time, in our case, 90 days, American Express will be above a certain point. And we'll find out what that point is. And if it is, we can receive $450 right in our pocketbook right away. And if it does get to that point and beyond, there's a potential of winning nearly $1,000. But we're going to shoot for just 25% of the max, which 25% of $1,000 is around $250. And there it is right there, $240. And that'll give us 44%, which is exceeding our APR goal of 24% that Warren Buffett does between 20 and 24. And this is in 3 months. Phenomenal. Let's dig a little deeper into this stock. American Express revenues up 31%. Wall Street Journal. It says corporate travel is increasing. Didn't know that. Consumer spending. What American Express earnings tells about consumer spending. Consumers are ready to go out and travel. Airlines, lodging, restaurants showed soaring consumer outlays. We're going to have a recession, and customers and consumers are still spending. Interesting. Looking at simply, and we see a big green or pale green snowflake. That's good. The health of this company is good. It pays dividends. It's got some value, and that means it's trading below its fair value, 47% below. Earnings are going to grow about 10% per year, and they've grown in the past 12%. This is not rocket science. Competitors are MasterCard and Visa, and they seem to be greenish too. But American Express seems to be big and green. That's what we look for if we're going to buy. And we see a lot of swinging here. As it hit the bottom and it's going to swing up, that is the question for trading. Who knows? Nobody knows. I'm thinking it's going to go up. I have no clue. Lots of news out there. This Simply Wall Street articles is basically saying the earnings and revenue is growing. And that's good if you're going to buy a stock. And if you're basing your analysis on free cash flow, the fair value of this stock should be trading at around $300, and it's currently trading at $153. Kind of expensive. You can't trade all just cheap stocks too. You need to trade stocks that are going to hang around during a recession. And I think we're in a recession, and people are still spending on their credit cards. And this is a price to earnings ratio versus the peers, and it looks like MasterCard and Visa are overvalued, and American Express and Ally and Discover are undervalued. The better bargains are these, but who's to know that you might do better buying these stocks. Short-term, assets exceed the liabilities. Long-term, there's some risk on the table here. And this is not that big a dividend. It's 1.36. And there's other stocks on the market that'll do better. Okay, there's a tool out there called Options AI. It's free to use. It gives you the expected move of a particular stock. And it's saying for American Express trading currently at 153, for the next week, there's going to be about a 3% chance, 3% move. In the next month, it's 6%. And you'll see I use 6% a lot in my calculations because I expect to move at least by that much. But in this case, we're doing a 3-month trade, and it's about 12%. So you pop that figure number in from the calculator, the move expectation, and then you can calculate where your high strike and the low strikes are based on that. And the high strike, if it does move that way, it'll be 171. Somewhere in there, 171, probably a little bit lower than that, and 134. So we're thinking it's going to go up. So it's going to hit this one. We're thinking before, or I'm thinking, you might be thinking the other way. I'm thinking it's going to go up. And if I'm investing about $1,000 and the stock is 153, I can buy 6 or 7 shares. And at the end of the day, in 3 months, I'll have 119 with those strikes. Do you think it's going up or do you think it's going down? That's called trading. And if you just invested in the stock, that's the simplest way to do. Or buy a put or a call. In this case, you buy a call, but you need a lot of margin for that. Anyway, if you did that a few times, and you could, in 3 months, you could do 4 of these, you would have for yourself an APR of about 47%. That's good. 10 or 11% now. Okay, using another free simulation tool called OptionStrat, I'm going to use a strategy called a put broken wing, which is basically a long strategy. And it consists of selling 4 options. 2 strikes at 165. We're buying a 170 put and buying a 150. And this strategy puts this kind of scenario there. As long as it stays above 155, it has to go a little bit higher. We are going to have some wins up to the max profit of 959. And if it goes up to 165, that's where you make the most money. That's that little Christmas tree type looking thing here. But if it gets beyond you and keeps on screaming up, you're going to have a chance at making 459. This is an expiration. In a minute, I'm going to show you how you can take a profit much earlier. And if you remember what I said, I'm shooting for around 50%. $450 put in your pocket as soon as you do this trade, and you have a $500 loss. The max profit that you possibly get is $959. Looking at the table, this is your profit area, and $250 is in the middle there. That's what you're shooting for, half of the net credit. And if you hold it to expiration and it stays up above this price, 155, you could really actually make some money if it stays in this area here. I'm going to show you one last thing. If it only goes down a little, this is the problem with this one. If it only goes below a little, you start losing. So you have to get your direction correct. It needs to stay above 155. It's at 153, so it needs to come up a little bit. And if it stays above that, we have a profit. If it goes a little bit above 155, 156, we can start taking profit. And we're shooting for about 50% of the net credit received, or 25% of the max profit. 25% of the max profit of $1,000 is $250, just the same as this is. And that is here. And if it goes down a little bit, we got to get out of here. This one has no flow. You got to get your direction right on this one. Sometimes you can set these up that you can have 8 or 9% and go the other way. But this one here is set, and it's based on the cost. It's based on the cost, and this can only move down a little bit. So what do you think of this trade? Is this stock going to go up or go down? Is the MACD, the stochastic, and the RSI, are they saying up? Does Mr. Zigzag say up? He doesn't know what it's doing right now. No one knows what tomorrow will bring, but that's trading. So, I think this stock is going to go up. The MACD says it should go up. The stochastic RSI and the RSI all seem to indicate stock rise. The Zigzag was going down and knew what it was doing, and then suddenly it doesn't. And it might be thinking it might go up. You remember, you can't trade with the Zigzag because it looks to the future to make and be perfect. It's kind of like I told you so after 3 days after it happened. With a move expectation of 12%, if you bought the stock, you could make $120 in about 3 months. That is good, but if you used a broken wing butterfly, which is a long strategy, you'll have $450 credit put in your bank account immediately that you can use for loan value on your margin. You have a max loss of $500 and a max profit of nearly $1,000. And if you shoot for 25% of this max profit, that's going to be around $250, $240, and there it is, which is 44% profit, which is great, and that exceeds our quarterly goal of 6%. And all this has to do is go a little higher from where it is at now. But it can't, you have to be right in your direction or you stand to lose. I like this trade. Before I let you go, I do have a watch list out there that shows the trends, and there's another watch list that shows the MACD, the stochastic RSI, and the RSI. And they show them separately. You have to kind of follow each one, see which one is working best for you. And I have my settings in the description below. And if you want a little more for the price of a cup of coffee, you can get a 3 indicator strategy when all 3 occur at the same time. It gives a stronger signal. And I have a roadmap to show you which way to go, including scaling, which is important to add on to your trade. That's how you make money. And of course the running totals. Check out much of my Discord chat is free. I'm not really trying to sell you anything, and I'm still making my money with it via the stock market. Remember to subscribe. Remember, you don't have to be perfect. You can do rinky-dink analysis. You just got to know what you're trading. Swing trading is about 75% looking at the charts and your indicators. But you got to know what you're doing. You got to know your stocks that you're trading, and that's why I have a watch list of stock that I know and love. And you don't have to be perfect. You don't even have to be able to spell. Happy trading. Catch you on the flip.